Good day everyone, it's Engelo Rumora here. I'm your favorite Australian and the real estate dingo, bringing you another awesome vlog. And today I'm talking about this: why you should only invest in B-class rentals. Let's get it started. So here it is, guys, another great vlog by yours truly, me. And look, I'm probably gonna ruffle a few feathers here because I know that there's a lot of perceptions out there from a lot of other real estate investors. And look, I welcome the heat, so please make sure to comment below. But guys, look, I'm a little bit biased, okay? Why? Because, you know, I run a real estate company and we specialize in B-class properties. So please forgive me, but that's what I'm gonna be talking to you guys about today. But I also want to compare the other asset classes, okay? So let's talk about an A-class property in an A-class area. This particular property and area will predominantly be in an area that is quite affluent. You know, the prices are going to be, I guess, quite high, and I don't want to talk about any specific figures because every market has its own different price points from an A-class standard. But the likelihood of this area being heavily owner-occupied is very, very high. You know, the likelihood of it having some amazing amenities and infrastructure and shops and restaurants and everything that anyone could want and need within close proximity is also going to be pretty high. It's going to be in a great school district, and it's just going to be, you know, those homes that when you look at them, it's a property that you want to live in, but not necessarily own as an investment property. Why? Because I just don't feel that the cash flow is going to be sufficient enough to really get you excited. And not just that, you know, I also believe that there are alternate investment vehicles where you can probably get the same return on investment as in 3, 4, or even 5%, but without the headache that you might come across owning an investment property, right? Because as landlords, there's always something breaking down that we need to fix. A leaking pipe or a clogged toilet, or, you know, the gutter's fallen off, or whatever it may be, right? So you're always gonna get that phone call. And look, passive income financial freedom is about not getting that phone call. So I think that you're better off putting your money elsewhere. Now, just off the top of my head right now, I remember looking at some bank rates in Australia right now, where I'm from. If you haven't noticed by my awesome accent, I think you can like tie up your money in a term deposit over there and get like 3.5% per annum without doing anything. So to me, that's kind of not a bad conservative little investment if you've got a large capital of money and you want to diversify. Or you can buy a property in an A-class area, probably get the same rate of return, and, you know, get that phone call, that dreaded phone call that none of us want. Okay, so that's A-class. Let's talk about C-class quickly. In my opinion, guys, C-class, even though it presents an amazing opportunity on paper, I don't really feel that those paper figures are going to be achieved in real life year after year on a consistent basis. In my opinion, there's just way too much volatility in a C-class area. And this is an area, if you drive through it, there's going to be boarded up homes. It's just going to be more derelict. There's going to be abandoned cars or, you know, funky, janky looking cars. There's not going to be a pride of ownership in the community. If you go on spotcrime.com, you're probably going to find a higher than average crime rate in the area. And it's just an area that you're kind of driving through and looking at. It's not somewhere where you would feel, I guess, fully safe living. There are some decent C-class areas, but, you know, it's just one of those things where it's not comfortable being in that particular area. Another thing to make mention of is a C-class area is predominantly investor-owned, or tenants are residing in this particular part of town. Look, my opinion and my experience has led me to believe that for those investors that want to be active and hands-on, this area can deliver a fantastic cash flow for you, but it is going to be a full-time job, or it is going to require a lot of your time and attention. Now, if that is what you want to be doing, then great, go ahead, do it. I did it, did really well, you know, got threatened to get shot a few times, but hey, you know, us Aussies, we deal with knives, not guns, so it was pretty much, you know, it wasn't a big problem for me getting threatened to get shot in the area. But jokes aside, guys, look, so that's kind of a C-class area for you. I think you can do well. I think you can make money in there, but you really have to be hands-on, and you know, it's going to require a lot of your time and attention. Then we've got my favorite, right? And that is a B-class asset in a B-class area. Guys, I'm proud to say that I consider myself to be a blue-collar working class guy. I live in the exact same areas that my company sells in. So when we sell a property to our investors, I always like to say, hey, your tenants are my neighbors. Look, it's an area that it's got infrastructure supporting a tenant demand, okay? It might not be some sexy infrastructure like in an A-class area, but it's still gonna be, a university or a decent school district or some kind of employment. Like here in Toledo, we've got the, GM Powertrain, the Jeep factory, the Chrysler Assembly. It's kind of more blue collar, a lot of glass, a lot of steel, a lot of manufacturing here. Everyone likes to live close to where they work to. I would say it's a mix, 50% investor-owned, 50% owner-occupied. There's still a pride of ownership in the community because even the vacant homes, they're very hard to spot because the other landlords and homeowners like to upkeep the area, so they look after these vacant homes to make sure that there's nice curb appeal in the street itself. Another thing to make mention of is the cash flow also tends to be much more consistent. And what I mean by that is, the tenants will stay and pay. In a C-class area, it's very volatile. 1 year might be good, the next year might be bad. In an A-class area, you're probably gonna have some white-collar great tenants that are gonna stay and pay for a very long time, but the cash flow is pretty low and it's just not worth investing in my opinion. And then in a B-class area, it tends to be a higher cash flow, a decent tenant that's consistent year after year. And look, as real estate investors, guys, you don't need to whack every ball out of the ballpark. We're not all K-Rod or whatever the guy's name is. I'm not a fan of your sport. I think soccer or football is the world game. So, the bat that you hit the ball with and the egg-shaped ball. Sorry, I'm getting off topic here. Guys, consistency is key to successful real estate investing. You want a steady return. You want to be as hands-off as possible. You want passive income. You don't want to deal with headaches. And you definitely, don't want to deal in an area where you're really not getting a good return on investment. So B-class all the way. I believe in it. I do it. My advice to you is that you should too. And if I'm wrong, I want to hear from you. Comment below. That's pretty much it, guys. Thanks for listening. Once again, I'm Engelo Rumora. I'm your favorite Australian and the real estate dingo. I'll catch you in the next vlog.